Hi, I'm John Diaz, President and Broker of First Nation Realty and Investment. I'm a certified distressed property expert, which is a specialist in short sales and foreclosures. Our company is also approved by HUD to sell their foreclosures. I'm going to be talking to you today about the tax credit and expanded tax credit, which now includes homeowners who've owned their home for the last 5 out of the last 8 years. This is an expansion and a change from the previous first-time homebuyer tax credit. I know people have concerns out there. The media has scared a lot of people. They have fears about the economy, about their jobs, about high unemployment. I think everyone also needs to hear and balance in the benefits of buying now. Why should I buy now? Well, number one is the tax credit that we're talking about. Number two is the affordability. The houses are affordable down to 1970 levels. If you look at the price per square foot, it's down again to 1970 levels. The average home in Palm Beach County is $243,000. It's $110,400 in the Treasure Coast. Rates are at near an all-time low. There's quality inventory. There's also tax portability. If you've lived in your house for a while and you have a low tax, you move up and buy a bigger house, you pay the same as you do on your current tax assessment. The tax credit is for first-time home buyers, the first one, and a first-time home buyer is someone who has not owned a home in the last 3 years. The amount of the tax credit is up to $8,000, and that's based on 10% of the purchase price. In other words, if you buy an $80,000 home, you qualify for $8,000. If you buy a $70,000 home, you qualify for $7,000. So it's 10% of the purchase price. A definition of the first-time home buyer is someone who hasn't owned a home in the last 3 years. The timeline and deadline is you need to be in contract by April 30th of 2010, and you need to close by June 30th of 2010. Who is eligible? Well, there are income limitations. It's $125,000 if you're single, $225,000 if you're married with couples, and there is a $20,000 phase out on both. The home can be up to $800,000. The sellers cannot be a relative, and you also must maintain residency in the home for 3 years after you purchase it. Your credit, one of the main questions is, do I have to pay this back? The answer is no. You do not have to pay the tax credit back. How do you get the tax credit? You complete the IRS Form 5405. This can be completed the same day as closing. And how does it work? Well, for example, let's say you're going to get you do your taxes, you're going to get a $500 refund. Well, now you bought a home, you do the 5405 form, you're going to get $8,500. $500 you were getting before, and $8,000 for the new home if it's over $80,000 purchase price. Let's say you owe $500. Well, they're going to deduct that from the $8,000. You would get a check for $7,500. You should consult a tax professional to get more details. Like we said, the expanded tax credit now includes current homeowners, move-up buyers, or someone just maybe even moving down. The dollar amount is $6,500 or 10% of the purchase price. So you have to buy a $65,000 higher home purchase price or higher to get $6,500. You must have lived in your home for 5 consecutive years out of the last 8 years, and it does have to be your primary home. The house can cost less than your current home. One of the things that people ought to take into account is buying in a down market. People say, well, I may lose $10,000 if I sell now on my home. Yeah, but you also have to take into account maybe you'll make $20,000 on the purchase of the new home. Also, the rates at an all-time low. There's a tax portability where you can pay if you move up on a house, you can pay the same taxes you were paying before. So there's a lot of reasons in why it's a good time to buy in a down market. And even let's say you bought it and the price goes down 10%, that's nulled and voided by a 1% increase in your rates. Again, the rates are at an all-time low. Another question I'm asked a lot is, should I wait for the bottom? No one has a crystal ball. First of all, the economists predict that we are pretty much at or very near the bottom. And the only time you're going to know when it's at the bottom is when it's too late and you notice that the prices are going up. The sales have been going up every month, and the inventory's dropped 17% over the last 2 years. So those are signs the market is at the bottom and flattening out and activating again. If you need to sell your home to get a new home and get the tax credit, time is of the essence for you. You really need to act. The houses are affordable. The rates are low. This translates into a total cost savings over the period of your loan that is very significant. At First Nation Realty, our agents are trained with the tax credit for the first-time home buyer, the expansion, move-up or move-down buyer. We're also trained with foreclosures, certified properties, and short sales. So please give us a call if you're looking to buy. Our number is 561-242-3339.